Nothing in this episode is financial advice.
Yes. None of this views are ParaFi's. They're my own. So do your own research.
Hey folks, this is Anatoly, and you're listening to the Solana podcast. And today I have Santiago from ParaFi with me as a guest. Awesome to have you.
Hey, Toly, it's great to be here. Thanks for having me.
Yeah, I'd love to kind of hear your story, how you got into crypto, and like what ParaFi as a fund is all about.
Yeah, definitely. So I got interested in crypto in 2012. I was at JP Morgan at the time, and I read the headline, right? Magical internet money. And it was hard to overlook. Really, for me, it was I studied game theory. And as I was reading the Nakamoto consensus, I just said, like, holy shit, this is a new chapter in game theory. Like, you just solved like what could be the Byzantium standard problem. And that can just allow you to reach consensus without trusting a counterparty. And it coincided with like me doing all these deals at JP Morgan and seeing how like the bane of my existence was like digging through not very transparent information and seeing like how a simple wire transfer after months of work could totally derail like a $10 billion acquisition. And it was just like somewhat frustrating, like juxtaposing what I was seeing in Bitcoin and what I was seeing at JP Morgan, which was a lot of friction. And I said, well, if this has a remote possibility of working, then there's something interesting. And so over the years, like after JP Morgan, I was at a SageView Capital, which is a growth equity fund. We were investing in open source software and fintech. And that's where Ethereum got off the ground. And, I didn't candidly know if Ethereum is going to be like powering DeFi. I like fintech. I think it's one of the areas where like the internet, like finance hasn't caught up to the internet. This is sort of the idea that I keep coming back to. But open source communities do really interesting things. And Ethereum and certainly Solana and some communities are really powerful, and like compounding effects of that become really interesting. But of course, like traditional funds will never touch crypto. They still are in this state of the world where they're not touching it. And so at some point, much like you, probably just realized I need to do this full time because the space moves so quickly. And so the ParaFi was started in 2018 with this singular focus of I think that DeFi is a killer use case, and it's going to be really transforming the rails of finance.
That's really cool. The parallel with me was that I kind of loved open source software. This was me as like a 90s kid learning computer science and seeing like Linux being built. And then the whole thing with SEO, like lawsuit against like the bad guys coming in to try to take it away. But there was no way to like make a investable business out of it. Like outside of like a couple really weird examples, like Red Hat, which was just there super early. And then, MongoDB maybe is like another one. But I always felt that like trying to give your code away for free and then trying to like twist the arm of somebody's arm backwards to pay you a license deal for like support was like always such a bad environment. Like it felt like kind of like scammy. Totally. But like crypto, right, despite of all the scams happening, I think is like a more honest way to build open source software. Mm-hmm. Here's a community, here's a token that means something for that community, right? And being part of it, owning that token as a part of that community and part of the development process.
Mm-hmm. You're totally right.
It just seems way more transparent.
Yeah. I mean, I remember because we were investing in open source software at SageView, and so many VCs like missed the boat because like, how do you monetize something that is inherently free or forkable or copied by anyone?
Yeah.
And then Red Hat came along, right? And then IBM, I think it was IBM that acquired it. Yeah. And everyone was like, oh, wow. And then Mongo. And so we were investing in open source. And to your point, I always felt open source is very powerful, but look at Linux. Very few people actually, you didn't monetize Linux. Like not a lot of people but really this crypto is open source on steroids because it solves a lot of the issues of monetizing and sustaining open source communities. So yeah, I totally agree with what you said.
Yeah, it's an advantage to be open source, right? We have to give our software away. We have to grow our like ecosystem, our like knowledge base. Like every engineering brain that understands Solana to is value added to the network. That's like the crazy part. You guys typically don't invest at the infra layer, which I thought was interesting. And recently I was talking to Andre at one of the clubhouses, I think that was even hosted by you, where he said that he considers himself like a layer 3 developer, that he doesn't even worry about protocols. He puts stuff together into something that's consumer facing. Do you guys see that like like in my mind, I kind of agree with both of your theses that value creation actually occurs at that like last mile
Mhm.
where you actually get to talk to people, right? That's and like figure out their problems. What is your like thesis behind this, and like why did you guys make that choice?
Well, I mean, at a personal level, I'll tell you, I think that like value will accrue at different parts of the stack. I think we're early that we just don't know, right? But essentially, like I guess in the traditional Web2 world, you have all the layers of the internet, right? HTTPS, like none of that accrued value. And then you had this very tiny sliver of like the user aggregation layer that accrued value. Like this is Facebook, Snapchat, Google, Netflix, Salesforce. But I think with tokens, like, you expand that and you say, well, you actually can capture value across multiple layers of the stack. The question then becomes on a relative basis, where does value accrue the most? But that's not to say the value can't accrue at layer ones. I mean, I think you have some very strong proof points that that's the case, like with Ethereum, with Solana, with Bitcoin. And look, I guess none of this is investment advice, right? Just full disclosure, but because we're going to start talking about these things. But generally speaking, like I do think that like value can accrue. It really depends on the case by case of what is the monetary policy, what is the token structure of these networks. And I'm convinced that like there could be really good products that have a terrible token structure and just don't accrue value. And that can be true for a layer one. It could be true for a layer three. It could be true for a layer two. So it really kind of, I think, requires you to look deeply into the actual monetary policy token structure of these networks. But, as it relates to like your second part of your question, it's just our background. Like my background's in finance. Like I gravitate towards DeFi. And so, I don't pretend to do like everything. I guess there are certain folks in the space that just approach this as a generalized way of investing, and that could work well. We just like to be more narrow in the things that we understand. We think we understand better, or I think I understand better.
Got it. Like, so I, to backtrack a little bit, I think the value does accrue at the infra layer, but it's more like, when you're talking about internet and protocols, Cisco is a $200 billion company,
Mm-hmm.
right? Like, and, they're able to get value out of internet protocol level. And Microsoft is like, $1 trillion operating systems company, right?
Yeah.
Like,
Yeah.
and to me, it always seemed like the lower layers are less risky and get commoditized, but also really hard to compete with because the technology quickly becomes less general, like less mathematical and more engineered.
Mm-hmm.
To build like a 5G modem that's competitive with Qualcomm, you don't just need to understand radio. You have to have like 10,000 people have to like micro optimize every nuance of it, right? Like, which is a ton of work, right?
Yeah, I know. Look, from my perspective, we were just talking about this before we started this, but I was part of the Solana hackathon, and to me that was really interesting because it forces me to follow the developers and seeing the quality of developers, hearing from them. Look, the tooling has been much improved. There's every incremental protocol that joins this network is enhancing, right? And so as more of these hackathons continue, then I think it just becomes like it really kickstarts this flywheel of this network in a very interesting way, right? And look, you saw it in Ethereum. Like, people tend to forget this, but Ethereum for a long time struggled with product market fit. You're trying to boil the ocean. Like I understand that it's a general consensus, but what do you do with that,
yeah,
right?
yeah,
Bitcoin is very singularly focused on
yeah,
one particular thing, and it doesn't pretend to do other. I mean, you know what I mean? Like Bitcoin serves a very clear purpose, and Ethereum, in the absence of Maker, for instance, like you really needed to have that core backbone
yeah.
to say, okay, I have a stable coin, and then I can build all the different money Legos. And so, for me, it's interesting because look, I definitely agree with you that like and by the way, TBD on the value accrual for ETH in the absence of EIP 1559, because you can have a network that has a ton of demand, but does that value accrue to the token? Unclear, right? And so, these are the things that we think about a lot. I mean, I think it's quite early still. There's a lot of experimentation at the layer ones, but we're looking at all of them, I guess.
Yeah. Do you think like, yeah, what is a universal computer for, right? This is like a really kind of abstract question, and like when people tell you it's for everything, it's really hard to reason with that. Do you think that the finance applications right now are almost like the search engines of the 90s, where it's obvious that these are like the things with product market fit? Like these are going to be sticky no matter what happens in the future.
Oh yeah, I mean, it's a great question because I don't know if this is SGs or Google or AOL or Facebook or like MySpace. But where I take stock is there's a lot of usage, which is very different than 2017. Like there are a lot of folks in the the use cases that you're serving these users is strong, right? And you're seeing it on chain. Like you can verify the traction, you can verify the level of activity. And in many cases, like it's been remarkable to see the growth of like stablecoin issuance, for instance, or a number of developers entering the space. And so to me, that's most interesting of what's going on in these networks. But yeah, it's unclear. Like, I guess from a where are we in? Is this like 1970s, 1980s, 1990s, 2000s? I don't know if you have a view. It feels like we're very early. It still feels very early because there's a lot of like excitement and experimentation, but there's not enough standards. I think there's a lot of design space and opportunities. Interesting how different L1s will connect and value will be transported between these protocols. I've heard you say before, which I think it's a very interesting kind of observation, which is, when you do like I guess there's two ways of innovating, right? One is like a step function improvement, and I think like if you're an existing protocol, like you sort of like make improvements and you go, but then it could take another protocol to do like a step function improvement, which really rattles in many ways like what exists. And I guess if you look back on the internet, there were instances where you had this sort of leapfrog improvement and it just transformed a lot of the things that were going on, like software as a service versus the license model. Like that was like a breakthrough and so, yeah, anyways, I've heard you say that. I think it's a really interesting observation and something that I always think about because I'm not prepared to tell you if we found like the killer, the best model, the best design.
Behind every step function is like 5 years of people grinding at that. That was like so obvious to me during the feature phone to smartphone switch. It literally happened in 1 year, but my team, like building Brew, we were grinding at that for like 5 years, and then Apple just kind of dropped this magical
Yeah,
device.
yeah. I mean, it's fascinating, right? Because when the iPad came out, I was like, I don't know if I need this. This just feels like a bigger smartphone, and then
Yep.
it just transformed my consumer behavior in a very meaningful way. Nokia sort of missed the boat on smartphones. Microsoft missed the boat as well on smartphones, and so this is a very both interesting and challenging problem of open source, which is the compounding rate of innovation is much, much faster because everything is open source. And so, everyone's sort of improving and forking. And look, with the internet, like then the dissemination of information, like I think the innovator's dilemma is much it can pronounce itself like faster, right? Whereas the turnover of the S&P 500 over the last like 100 years has been radical, right? I mean, no one imagined like 20, 30 years ago that like most of the composition of the S&P would have been like technology companies. Like no, very few people like believe that. The question today is, hey, do you envision a world where most of the activity in the traditional Web2 world is going to move over to blockchains? And if so, where? We're still in that phase where most people don't believe it. I think the crazy ones in a very small space of this world believe it. But it's going to take time to do that, I think.
Yeah, I agree with you. I think what we're lacking still is founders that are more product centric, less chain centric. And there's a couple of those, like Ranil from Audius is like my favorite example of this. He doesn't care about the layer one. Like he will use whichever one he will serve as his like product vision better. And he's got this singular thing about music that he believes in that's bigger than like anything else to him. There's very few of those folks that are like that have that much conviction and care less about like ETH1 or Ethereum versus Solana, right? It's more about like getting that thing done.
Yeah, it's funny because like, I'm convinced like very few people understand how the internet works. Very few people can draw a bicycle and tell you exactly how the components work, but they all use it. You know what I mean? And so like, you're right. I mean, ultimately, I think good product wins. You look at the VHS versus Betamax conundrum, right? One was a better technology. The other one was just better marketed. I believe that like good technology with good product mindset always will win. But at the same time, like consumers don't necessarily care. Will they really appreciate decentralization and censorship resistance and minimize counterparty risk? Probably not. Like at scale, probably a very small subset will care. But I'll tell you what they will care about is like, hey, can I earn 8% of my savings? When your traditional bank like JP Morgan, and I always like think JP Morgan because that's where I work, gives you effectively negative real interest rates. And I think we're very close to that tipping point where, you already see Circle offering this rates, BlockFi's of the world, like venture and you're like, hey, you can actually earn a order of magnitude on your savings. Crypto's always been a retail phenomenon, I think, up until now. And that's fine. I think ultimately the reason why the large institutions like BlackRock and JP Morgan have come around to offering, even like Bank of America, I think, or Morgan Stanley are now offering like direct exposure to crypto investment products to their customers. I don't think it was someone in their risk committee that woke up one day or their board meeting that said, hey guys, we need to do Bitcoin. No, it was, I think if we don't do this, we will lose our customers. And that's super powerful, I think, because retail would really push that agenda and really make, I think, institutions come around to the opportunity, at least in DeFi and offering financial products that, provide more value, right? And I think to your point, like, I think good technology gets adopted if it fulfills like three core properties of like it's faster, it's better, and cheaper. It's sort of a 10x improvement because most people are very, very resistant when it comes to money. Like the stickiness, like how many people actually change their bank account? The retention of these, like once you open your bank account when you're 14 or 15, your parents open your bank account at Wells Fargo, you're probably going to be a Wells Fargo customer for life,
Yep.
unless there's a material shakeout. But I do think that in this macro backdrop of record low rates, DeFi becomes extremely interesting for people.
Yeah.
And where that actually goes, which protocol is it? Ethereum, Solana, Polkadot, Cosmos? Folks might not even care. And there's a version of this world where it gets routed to the most efficient place.
Yeah, I think if we're the infra level folk, like we don't get to talk to the consumer. So I think that story will play out similar to like infra in like in everywhere, right? Like eventually it becomes commoditized, but the best, you still have a ton of competition there. TSMC versus Intel, right? is a pretty obvious competitive story there.
Yeah.
Do you see like these like the interest rate savings application as a breakout app that could actually go mainstream?
Yeah, are rates sustainable? Like 10,000% APY is absolutely not, right? Will they continue to persist to a level that is sufficiently interesting based on the level of risk that one is taking? Yes, I think so. You don't necessarily need to have 20% APYs, 50% APYs. You need to have 4 or 5. And I think the flow would be something like as follows, right? You're in your bank account, click of a button, you lock your savings for 3 or 6 months. That allows the bank on the back end to either ping someone like Genesis or some like crypto native or have their own desk, go on chain, deposit in a money market protocol, earn some interest, and then maybe as part of that entire flow, wrap it with insurance like Nexus. And then so it's like FDIC insured or mimicking, like for the uninitiated in the US, like FDIC just means like you're protected up to a certain amount on your principal. And so I think that flow resonates with me where it's possible. I think Circle is already offering customers 8.5 to 10%, depending on like how much time they're willing to lock their cash for 3 or 6 months.
Yeah.
Along with stable coins. I think these two are like the Trojan horse of this industry. Like I guess the internet really took off, and you probably know this better than me, like with email. I think email made the internet.
Yeah.
You know what I mean? Like it was like the thing that justified like having a computer at home, and then justified CapEx in cellular towers to have flip phones and then smartphones. And, but it required email because pre-email, everyone's like, yeah, it's fun. There's pictures of cats in the internet. I guess we now have crypto cats. And so like, it's an interesting like parallel, or corgis or some of these, pixelated art.
Yeah.
But stable coins, and also at this interesting intersection of COVID, where digitization becomes much more important. And you saw it in Asia for the last 15 years, like Asia totally has leapfrogged the US and Western countries as it relates to the fintech experience. The relationship folks in Korea and Japan, particularly like China, Vietnam, Indonesia, is much, much different than in the US. You know what I mean? Like people don't have any semblance of what of a retail branch is. They use everything is like vertically integrated in one app. They do everything. And you look at that and you say, you're left wondering, well, we're going in that direction. The problem is most people in the US, and this is not critical, but they don't appreciate how broken finance is the minute you start doing it internationally, the minute you start crossing borders. This is why London is a fintech hub, because by default, you need to build products that can address some of these challenges. That this financial system at a global level is a patchwork of stuff that doesn't communicate very well. But DeFi is that, right? And so naturally, I think, more and more people are, and certainly younger generations are much, much more inclined and will be to think of once you get a stable coin, whether it be Libra's DM or a central bank digital currency or the digital dollar or just like something like DAI, it opens your imagination on what else can I do with this? Because people hate sitting on cash. And so once you do that, you're like, okay,
yep,
I can invest. I want to invest. I want to lend. I want to earn interest. I want to do a million things from that. And so I think that's where I think stablecoins are really, I think, the email moment of this industry.
Yeah. I like think the frightening thing is the global scale of it, is that you can rapidly like get absurd amounts of. I mean, to me, 5 billion TVL and Aave is absurd, but I'm sure to JP Morgan, they're
Oh,
like, should we be paying attention to this yet?
yeah.
But there's no reason why they can't go to 500.
Oh, yeah. No, absolutely. I mean, I would characterize DeFi last year as a very early beta experiment, trial run of what could happen. And I think we're still in that beta phase. There's still a lot of risks. There's still a lot of hacks, and there needs to be better rigidity, Lindy standards. But yeah, DeFi is a speck in the dust that no one has seen. No one. Now, of course, you have like 50 billion of TVL in the aggregate, at least in Ethereum alone. You start taking on Solana, and it becomes interesting. As soon as you hit 10 billion, 50 billion, some banks are getting, it's like, okay, maybe there's something here for us to do. But my estimation is like banks probably are the most incentivized to adopt this because they're hurting from the only departments that keep growing in banks is back office, compliance, administrative functions, which if you think about it, are very much simplified through blockchain. Like these things, like you can have a very clean record. There's no real reason why you wouldn't be able to underwrite a mortgage on chain if you're them, right? In a KYC pool of liquidity, your counterparty, who's borrowing, the provenance of funds. It's all very transparent. And I guess going back to why technology gets adopted, like there will come a time, like you certainly have, like, I think the pressure from customers that say, hey guys, we want to buy Bitcoin. We want to invest in crypto, offer me this product or I'll go elsewhere. So that's one competitive pressure, like not to get too much Porter 5 forces here, but the other one is like, whenever technology focuses on eliminating fat, eliminating a cost driver and optimizing that because their margin is declining, right? And when you have something like this that can, give them an order of magnitude, like ability to underwrite more mortgages on chain, you know what I mean? That frees up so much more capacity. Then it's just like a double whammy. And like, I totally agree with you. Like I'll say it again. Like I think DeFi, to your point around like just core backbone, I think DeFi will become like the operating standard in finance for a lot of these functions. Whether the consumer understands how their mortgage is being underwritten, maybe not. For them, it just might be like, I get an answer in minutes. I can compare my rate. I don't need to necessarily provide all this information over and over again. And the rate's more competitive. And on the back end for JP Morgan or Wells Fargo, they might just be able to underwrite order of magnitude more mortgages on chain.
Well, do you think there could be a world where we don't have them at all? Like there is like me as a human directly getting a mortgage from a million people and Chicago market makers borrowing from that pool and trading like directly, right? Like all in one state machine and one universal computer.
Yeah. I guess like thinking probabilistically, maybe. Well, essentially that's what a liquidity provider and something like Sushi or Uni is doing, right? You allow anyone to be a market maker and earn fees on their capital base. So I do certainly think that something like flash loans, for instance, is allowing someone to do arbitrage opportunities without requiring a massive balance sheet. I mean, that's just like as meritocratic as it gets, right? You don't need to have an ISTA license. You don't need to have like these arbitrary like things that only large players would be able to do. Now, the smartest guys in the room might be anonymous frogs on Twitter that just are really smart or really good developers and just understand how these things work. On another spectrum, I always think that like user aggregators will have a place in this industry because they abstract away the complexity for people. They provide value added services in the same way that like open source monetize like Mongo or Red Hat. Like providing value added services is the way that you kind of monetize open source. And I think is Aave or like or Compound or some of these protocols like the next JP Morgan? Maybe. Maybe. Will some banks really take a hit? Yes, I think so. I think banks will incrementally resist this new technology and new way of operating, will be left behind. They always do.
Do you fear like a backlash from like regulators that this is going to move too fast for them? Like this world is like, it's going to be hard to do KYC on 5 billion people, right? Or 7, a billion people participating in something like this. if there's no middleman, right? This is where like the government typically tries to stick its like checks in.
Yeah. Look, I mean, at a very primitive level, when I first discovered Bitcoin, I said, well, this could disintermediate money and state, and that might not go down as smoothly as one might think. The optimist in me says, and out to regulators, is a smart contract cannot be manipulated in the same way that order books or centralized parties can. And so from that perspective, everyone is treated equally. When you're interacting with a smart contract, it can be hacked for sure. There's risk on the code. But the smart contract, the programmability of money is the most fascinating thing that I think benefits consumers. The amount of consumers like surplus that will be created in this industry is massive because there's more transparency, there's more competition, there's more consumer choice. And what we need to focus on is, I think, consumer protection. Not everyone should be able to use some of these instruments, like derivatives or be super levered. I think we need, as an industry, and I think this is something that I am very focused on, is self-policing and adopting good front ends and adopting good standards like whitelisting, having a reputation layer where, similar to like the accreditation rule, is very, very bare bones. It's so arbitrary that it's like, how is it that like why 200K, or I forget the rule, like why a million, and why does that make you a sophisticated investor? Well, I think we can do much, much better than that, right? Because blockchains are data rich. They have your wallet address has an entire history and snapshots of your level of sophistication. And I would argue that you can create and construct a really interesting credit profile and get a really good feeling of what that person and the level of sophistication of said wallet, or the person who's behind that wallet. And then you say, okay, that's your FICO score, right? Essentially. And then that will determine which protocols you can actually unlock, and which features you can actually get access to. There's a really interesting protocol called Rabbit Hole, which is started by one of the guys who is a dapper. So really, really like consumer centric. And that's the whole thing. Like your wallet is your resume, and that allows you go through these quests similar to like earn.com, and you need to like get badges to then like be like, hey, like this is actually a person that is very sophisticated. He can, therefore, if X, then Y. So yeah, like long-winded, I don't know. I think there will be backlash. Yes, there will always be regulatory concerns. I think where I'm most focused on is, I think for the most part, I think the smart regulators understand that this is probably as powerful as the internet, and you want to be pro innovation. There's a lot of really smart people that continue to like enter the space. Knee-jerk reaction regulations don't necessarily work as well. Whereas I think just having an open mind and open dialogue with industry and regulators is the best thing we can do.
Yeah, I agree with you. I think ultimately, like, the software is like creates transparency, right? It like eliminates fraud, and that's a long-term trend that I think a lot of the folks that are in government actually want.
Mm-hmm.
This is what they geek out on,
Yeah.
right? It's like, how do we actually eliminate the possibility of bad actors?
Let me pose a question for you. Do you think the financial crisis would have happened to the severity that it did if everything was on chain?
No, I don't. Like, I think, like, if Bitcoin existed 30 years prior, the collapse of the Soviet Union wouldn't have been as terrible for the humans there. The horrors of like a sovereign government falling apart and like that monetary rebasing that happens is terrifying. For myself and like me at a younger stage with like a bunch of my career still ahead, it doesn't seem as scary. But like for anyone that's retired, anyone that's older, like the risks of that kind of level of collapse are astronomical. And
yeah,
Bitcoin actually is like a huge hedge against that. That's awesome, right? Like that was like kind of seared into my mind as like in that I was 11 years old, like kind of growing up.
Mm-hmm.
So I wasn't quite facing it directly, but I do remember like my parents and my relatives having to go through that. So
oh yeah, yeah. I mean, it's similar to you. I'm from Mexico, and I'll tell you, no one ever thinks of storing their hard-earned savings in pesos, because you've seen it. You've seen the devaluations in '94 and continuously, where people like to think in dollars, but then what happens when you see M2 and M1 supply like skyrocket?
yeah, and like I think because of Bitcoin, I think the damage is basically buffered. Like there's a way to buffer it. Like people can take hedges, or they'll do it, right? Like they'll figure it out. And that's a huge driver for that level of adoption, which I think is important and will probably like keep the sovereign money afloat longer than it should,
Yeah.
or like eliminate those huge kind of failure points.
Yeah. I think at best it introduces a greater level of accountability in sovereign monetary policy, where once you have something that's non-sovereign and interesting, it just holds people to a higher degree of accountability and transparency and a way of doing things that once people expect more transparency, more accountability, then it's sort of like a Heisenberg principle of sorts, which is like once you understand that there's a watchkeeper, someone's observing the system and everyone's observing it, then it just in the optimist in me says it influences behavior at the nation state level in a way that perhaps nation state ends up becoming more like a corporation, because what this is all doing is shattering this notion of man-made artificial boundaries where money flows at the speed of information across the world. And once you do that, and labor, right, open source developers and these communities transcend borders and gender and any sort of biases, right, and you're really valued by your contribution and just by your contributions, and that level of meritocratic, like almost like free market where anyone can move around. Sure, you might be stuck in a particular geography, but I think there will be nations like Estonia and some of the Caribbean islands and some folks in Singapore that are ahead of the curve and become much, much more competitive in the same way that like companies compete for talent. I think you're going to start seeing that like shift, like a tectonic shift in how capital and labor moves at a global scale. And at best, that kind of collapses like these man-made like hegemonic forces that have existed for other reasons. But I think now my thesis is countries become more like corporations and it becomes a much more competitive market with crypto.
I don't know if you heard Balaji talk about this, but I have like a counter opinion, and this is
I want to hear it.
I don't know. I think a similar narrative is that Silicon Valley kind of lost its monopoly on intelligent folks looking for funding, and Wall Street lost its monopoly on like IPOs, right? You can now like do all of this on the internet.
Yeah.
You and I have never like actually shook hands, right? Like, yeah, so you can build those relationships like over the internet and at a global level and do it all globally. But I think I guess maybe because I have a family, I see that as almost freeing me to like stay in SF and invest in that city and like become actually more locally integrated.
Mhm.
Like to me, that's something like, I don't know if you heard of the term mutual aid networks, like where you have like people that have your back.
Mhm.
Like in the Soviet Union, like because the overall like system sucked, like the foundational like governments, everything was so terrible that you just relied on like your local networks, like the humans around you.
Mhm.
And where you have those, I think is like really critical. It's really hard to move those.
Yeah, I mean, I think humans are social beings. I think that is a key distinction of humans and what makes us, we're social animals, and I think I definitely agree with you. Like, especially in Latin America, it's so true too. Like your family, your extended family is super strong. And those bonds are what keeps you at a particular city, in a particular region. So I definitely agree with you. I think now you can port over that entire like nucleus, right? And just move it somewhere else, presumably. It's hard for sure, but like you sort of saw it in Venezuela where a lot of people just had to move and a lot of people were moving with their seed phrase in their head with a lot of the capital. Like, let me pose another question. Like, how would World War II would have shaken out if all the folks that got persecuted had the ability to store their wealth digitally and not fire sale their entire companies, their assets? What would have that done to fund resistance to be able to move quickly? I think that's powerful.
Yeah, I agree. I think it just wouldn't have even happened. I think that yeah.
I mean, wars are won purely on economical basis, and I think the ability to store meaningful sums of wealth that are outside the purview of perhaps states that try to do malicious stuff, I think is really powerful. Again, this is like the sovereign individual at its best. I want to go back to something you said, which is interesting. Like Balaji mentioned it, and I think you alluded to it around this idea of what's going on in San Francisco. Silicon Valley is a very strong community. I don't think it's going away necessarily. Are you familiar with the like O-ring theory? This is like a Nobel Prize 2 years ago, where so the O-ring is like what caused the Challenger accident, which you're probably familiar with. Feynman was the one that said like the theory is as follows: a very simple low level component in a very complex system can cause total chaos, can literally implode. And the O-ring was that plastic thing that held together part of the rocket and unfortunately caused the Challenger accident. And it really teaches, like, these are very complex social graphs and systems. To me, it's interesting because, like, could San Francisco lose its place as a hub of innovation? Maybe in crypto, yes. It's possible, very possible. And I think all of this starts, like, these complex system, and Jeffrey West kind of talks about it in scale, which is the faster a system expands, the rate of innovation, the rate of growth needs to also increase. Otherwise, you're bound to collapse at some point. Like, it's sort of a parabola. Like, once you reach a certain point, you're too big, and then if you're not growing as fast, you collapse. And it'll be interesting. I think open source communities, like, probably are better suited to, like, avoid that trap. You reach a state of, like, stagnation. Unfortunately, some of these, is San Francisco at a place of, like, stagnation, and people became too complacent or too elitist? Maybe. I think certain things are not helping it. But yeah, it'd be interesting. I mean, for me, that's one of the more fascinating things of this space. You probably saw. I mean, how many developers of Solana? Where is the team distributed? Like, where are these teams coming from? Do they need to fly to Palo Alto and Sand Hill Road to meet?
No, yeah, even none of our engineers are actually in SF. One of the last guy that was, again, a former Qualcomm person that was there working remotely at Qualcomm before he joined Solana is now moving to Italy, right? Like, so we kind of, like, the world is really shifted in terms of where you want to live, which I think frees you up to pick the place where you want to live, regardless of job opportunities, because you now have, like, this global network to do your, like, business, right? Like, to actually do that.
Yeah. I mean, especially at this intersection of, like, AI, and I think there'll be radical, like, labor shifts in the composition of the labor force. Like, a lot of these things, fortunately, unfortunately, depending on how you want to see it, are going to be automated. And then what happens then? And I think open source communities offer a window to a lot of these people, a lot of folks, to say, hey, there's an opportunity here to contribute in these communities. There's a way to actually monetize it as well and get paid for your contributions in a very meaningful way. And so I look at that, and I think that's the optimist in me that says, at this intersection of, like, I think with COVID, people realize remote work is possible. You don't have to be bound by these industrial revolution constructs of 9 to 5 bullshitness. People think freely, maybe think better in other environments. I think collaboration and human face to face is super important. Conferences are important. Maybe virtual reality gets us there. But generally speaking, like, I totally agree with you. I've never met you in person. The last time I met my team was over a year ago, and we've gone through a lot. And I think maybe that's what's shifting. People are critical of social media. It's like, that's not a real friendship. A digital friend, a friend of Facebook on the internet is not what a friend is supposed to look like. And what are you talking about? I have a lot of friends on crypto Twitter that I share much, much more values, principles, beliefs, and I interact with them daily, perhaps more than my childhood friends. So what is this construct of nationalism? Like, I don't know. I think esports, I mean, people might be more passionate about their crypto kitties and esports than they are about, like, their Olympic team in Tokyo Olympics. You know what I mean? Like, I don't know. Maybe I'm too crazy.
Unless it's soccer, the World Cup.
Yeah, exactly.
Like, being a fan is like becoming, I don't know. That's an interesting side note. Are you a fan? Are you, like, a fan of a sport or a music, or, like, like, you gotta be, like, rooting for the Mexican national team during the World Cup, right?
Yeah, unfortunately, like, my ability to root goes down because they never get past, like, quarterfinals.
Well, we're coming up on the hour. I'd love to kind of hear, like, your last thoughts on building this, like, kind of, like, upper layer application, and, like, for, like, those early founders that are thinking of jumping into the space.
Yeah, it's super interesting. I think we're at a pivotal moment of this industry where it reminds me a lot of what Google and Amazon did for the internet, where people start waking up. Okay, there's a very productive ecosystem. There's killer use cases. There's real traction here. But I think for founders, the message would be the design space is vast, super vast. Like, we're barely scratching the surface of what is possible. Not everything is copying what exists into the traditional world, at least in DeFi. Like, it's new primitives that are coming up, like flash loans, or like at this intersection of NFTs and finance, and, like, creating transparent price discovery for liquid assets. So I think it's super interesting. the primary barometer of this space is human capital. And I think we're seeing more and more, and you in this hackathon was super interesting, like the caliber of engineers, the caliber of product folks entering the space and thinkers is like order of magnitude of what it was in 2017. And I think that's always, for me, that's always been the leading indicator. It's like, I always take stock at something good will come out of like these open source communities where the compounding rates of innovation are like this, right? And the sort of the cathedral closed source model is sort of like more static. And so I think that is like super encouraging. I saw in the hackathon really interesting ideas, not only like porting over what existed in Ethereum and DeFi, but also like new primitives, which is, I guess, the question maybe for someone else in the audience or some other founders is, what are some of the use cases that haven't been built because you couldn't have like gotten them off the ground, or just it was really challenging in an environment of there's friction. We know them in Ethereum, like there's high gas and there's limitations to it, which is like as growing pains of a network getting adoption. But what are some of the other use cases that are possible in an environment where it is like much faster and it offers different, it's just a different design choice. So my view is, I think we're going back to like rounding out the discussion. There's a lot of tribalism in the space for sure. I think that's natural. That's human instinct, nature. It appeals to how we want to affiliate ourselves with. But I would just caution people to be maximalist. Like I never understood like Bitcoin maximalists. Like you realize that if you're rigid in your thinking in a space that is innovating so quickly, you're going to be left behind. And so I think the best that one can do is just be open about different things that are happening in the space. We're always, I think, ascribe to that ethos. And so, yeah, I'm very, very excited. I think it's not win-lose. I think to say that like one success of one protocol, one is detrimental to the other. I understand that win-lose like mentality. But I think a lot of this, because we're so early, because we're building and unlocking so much friction that exists in finance, at least in finance, in other areas too, it's mostly win-win. Yeah. And I think like, I hope that more people in the community thought this way, because it's always like, I understand that you have a vested interest in a particular project or protocol, but be a little open-minded. It's what got you here in the first place, probably, of being open-minded and being like, what is this crazy magical internet money? Let me learn about that. And like, I think we should never lose that as a community, that ability to experiment with new things, because the minute we lose that, then we just become exactly like the players that we're trying to disintermediate, not because we hate them, purely because there's just a lot of goddamn friction. I'm just fucking tired of people paying exorbitant fees and not being transparency in the system. And I think we're moving to a place that is brighter and offers, it's like if you open the door and you saw a way of doing things that solve a lot of the issues that are facing today in this world. And once you open that door, it's like, all right, balls to the wall. Like, let's go.
That's awesome. Man, I don't know if I could have closed this better ever myself. This is gonna be our call to action.
Yeah, rally the troops. Let's go.
Yeah, let's do it.
Yeah.
Thank you so much.
Yeah, guys, this is great.
This was
this is great. Yeah, continue to build, and I'm super excited to stay on top of what you guys are doing, and more projects in DeFi and Solana. And I think we'll definitely be looking out for that.
Awesome. Thank you so much.
Yeah, thank you guys.
Cool.